Unbeknownst to you, 5 Tesla stocks can be worth far more than you might imagine. While some may find this extremely dubious, Tesla enthusiasts can vouch to it. To learn how it's feasible, be sure to keep watching and tuning in. Elon Musk, the CEO of Tesla, is well known for being a walking scandal. Some claim that it is merely a gimmick to increase Tesla's and his personal visibility in the marketplace. If that's the case, that's a great marketing tactic for nothing. So well done. Given how many individuals are interested in holding Tesla shares, it might be somewhat accurate. Discover why holding 5 Tesla stocks is far more valuable than you may have imagined today. Despite a few bumps in the road over the last 2 years, Tesla continues to show signs of success with a reported Q1 net income of $3.3 billion in 2022, a quarterly record exceeding Wall Street estimates, and a Q2 financial report that shows revenue of $16.934 billion, which is about $400 million more than Wall Street expected. This and other items that made headlines could be the reason why individuals are interested in investing in Tesla. Analysts and investors disagree on Tesla's valuation. Some believe the EV company stock is undervalued, while others think it is overvalued. There are high and low valuations for Tesla shares, but the financial data from a while back shows differently, in spite of prominent figures forecasting a drop in the price of Tesla shares. For instance, 10 shares purchased for $6,940 at their highest price in June 2021 would provide around $7,500 in earnings in June 2022, or about $540. In the face of numerous forecasts that the price of Tesla stock will continue to decline, this is a noteworthy stock performance. This may be primarily ascribed to Musk's distinct management style and the fact that the EV company is leading the industry in innovation and R&D. By now, over 10 years later, investors who purchased shares at the $17 price per share during the initial public offering in 2010 would have received their money back. According to CNBC projections, a $1,000 investment in Tesla made in 2010 would be worth more than $36,000 on February 4th, 2020. Calculations show that over the same period, a $1,000 investment in the S&P 500 would have yielded a total return of somewhat over 281%. As of March 25th, 2022, a $1,000 investment purchased in March 2012 would be worth $148,755.8755.8755.87 Todd part. This return includes price gains but does not include dividends. During the same period, the S&P 500 gained 223.54%, while the price of gold increased by 13.37%. Analysts, on the other hand, anticipate that Tesla will continue to rise. Tesla is now working on a number of exciting new projects that are highly anticipated. It appears that these projects will increase the company's income and revenue, which will have a good impact on the stocks. Tesla is now hard at work on a number of projects before releasing them to the public, including the Starlink project and the FSD Cybertruck AI robot, Optimus. Similar to how they did with electric vehicles, Tesla will undoubtedly be at the forefront of the AI revolution. Once they have successfully introduced projects utilizing this technology, the price of the company's stock will undoubtedly rise significantly if this occurs anytime soon. Prior to the market explosion, Tesla stock was only worth a little over $100. After that, it doubled, tripled, and multiplied tenfold. Investors in Tesla stock owning 10 or more shares may see their money quadruple in a matter of years if the same outcome with the introduction of AI is achieved. Tesla delivered over 900,000 cars in 2021 and has plans to boost that number by 50% this year. The reason why so many experts are excited about Tesla stock is because of the company's experience in handling operations during the epidemic. It is well knowledge that as COVID-19 spread over the planet, everything nearly came to a halt. The majority of automakers at the time had to deal with a number of problems, such as supply chain shortages of chips. To keep its manufacturing operating in spite of this, Tesla rewrote its software and switched suppliers. It also established additional production facilities in Berlin and Austin, which is quite an accomplishment considering the economy's collapse during the pandemic. The addition of these 2 plants to the ones in Shanghai and California will boost operating margins and provide the capacity to produce more cars. Furthermore, there is a chance to attain larger gross margins thanks to the recently constructed operations in Austin and Berlin. According to future fund analyst Gary Black, by 2030, the market penetration for electric vehicles will reach 60%, and he predicted that Tesla would take up 21% of the auto market. According to Black, Tesla's valuation will increase fourfold from now to as much as $4 trillion by 2030. By the end of the decade, Tesla would be producing roughly 10 million vehicles annually, based on this projection of 85 million light vehicle sales worldwide. He even projects that sales of Tesla's present fleet will bring in $140 billion for the business, resulting in a 100% increase in Tesla shares. The goal of Tesla, a clean energy firm, is to hasten the global switch to sustainable energy by producing electric cars and energy goods at progressively lower costs. This is the driving force for the establishment of the Tesla Gigafactory in Nevada. The Tesla Gigafactory, located in Story County, Nevada, is a factory that produces lithium-ion batteries and electric vehicle components. It is anticipated to be the world's largest building and run entirely on renewable energy to attain net zero energy. The goal of this structure is to address Tesla's battery issue. With a projected area of more than 1.9 million square feet, this Gigafactory intends to increase manufacturing to 500,000 additional cars per year. Would you consider purchasing Tesla stock right now? Post your ideas in the space provided for comments below. The minimal number of shares one can own may be of interest to those who are interested in purchasing shares but are not very knowledgeable about the financial sector. The truth is not quite as simple as many may believe when they declare that the minimum number of shares an investor can buy is one. Buying fractional shares, in which a stock buy order can be placed with as little as $1, is becoming more and more popular among investors nowadays. Although purchasing publicly listed firm stock does not have a minimum order, several brokers in the past recommended purchasing equities with a minimum value of $500 to $1,000. This figure is because there are commissions and brokerage fees associated with every deal, regardless of the online or offline platform an investor uses to buy stock. Generally, the price of one share would be the same as the price of 500 shares. However, because a lot of online brokers are switching to commission-free trading, these factors might not be as relevant anymore. Having said that, investors can think about purchasing fractional shares using a commission-free dividend reinvestment plan or DRIP. Why should you buy Tesla shares with your hard-earned money? Even if there are a lot of unknowns around Tesla right now, much of the concern. Until the opposite is demonstrated, Tesla stock is gossip. Tesla's Shanghai Gigafactory is back up to producing the 1,000 EVs it was producing before its April shutdown, despite provocative headlines. Executives also think it is feasible to create 2,600 cars each day, which would enable Tesla to meet its 1.5 million EV production goal. Tesla stock is a good option for investors to acquire growth at a compelling value right now because shares trade for less than 50 times this year's earnings, despite the company's predicted 50% rise in vehicle deliveries and enormous profit margins. Additionally, an underappreciated Tesla pricing chart that appears to be on sale won't cause investors any trouble. The fact that Tesla lacks a PR department and neither purchases advertisements may or may not be widely known. Elon Musk, the controversial CEO of Tesla, does all of the work with free marketing, as was previously indicated. About Tesla's decision to forgo purchasing advertisements or setting up a public relations department, Sandy Munro, an automotive engineer with expertise in machine tools and manufacturing, stated the following: "What a fantastic concept. Someone else ought to consider that as well." After all, Tesla makes headlines nearly every day. Why? Since they are led by someone. Who is the president of Volkswagen? Please? Are you aware of Ford's president? Who is in charge of GM, do you know? Who owns Hyundai, Kia, Honda, Toyota, or Kia? No, you're not familiar with any of them, but you are aware of the Tesla CEO. With someone like them in charge, why would I need advertising? Why would I require advertising? Why would I require public relations? This is presumably the reason why the majority of people claim that Musk purposefully makes divisive remarks in order to generate conversation. If that turns out to be accurate, that is an incredibly clever and valuable marketing ploy. For more of this stuff, check out Tesla stock and our other films.